Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, into the charts we go today. Markets are slightly off their highs. We are seeing a bounce back effect today, although, again, we're only getting back about half of what we lost yesterday in the markets. So, again, this is what we would call a retrace bounce. Part of it is coming off the back of, the market yesterday didn't know how bad those terrorist activities were in Boston, and now we kind of know the full scope of it. The markets, I think, were a little bit more panicked yesterday that it could go on. Maybe there was something in a different area, in a different state. You never know how big or widespread it could be. And today we kind of know it was localized, as horrible as it was, to the Boston Marathon area. So I think the markets, again, got a little bit of a bounce back. That's probably why you saw a gap up today. Then we saw a little bit of a buy the dip mentality come in. And then off of this resistance today, we've seen a nice pullback. We're just holding the 20 MA right now. So we're just holding the 20 moving average. And the big question to the end of the day is, can that hold? And then if we don't hold, do we come back and hold this 50 MA? So right now the markets are not in a bad position in terms of strength, because we are holding the 20 and we do have the 50 just underneath. Upside, if we were to break out to the end of the day, this would be a huge level. Pivot gap window from yesterday, 200 MA, trend line right there. That is a major level. And then following that, you'd obviously have your gap fill right here, which would be your following level. But again, right now anyways, the markets are kind of in a position where they're getting a bounce back. It's a basic 50% retrace. It's giving a good bounce to most stocks out there like Apple, Google, Baidu, Amazon. However, other stocks are weak on the day, like the financials. Financials very weak today. Goldman Sachs reported earnings this morning. Initially, the stock gapped up and then just sold straight down. And this stock, again, is now down $3.50 on the day. JPM in sympathy is basically flat, so it's not able to rally with the rest of the market. This stock is down a little bit, or flat on the day now, after being up a little bit earlier today. So again, financials weak, but technology very strong. We have a mixed bag in the commodities. We are seeing bounces in gold. GLD is up $2.10 right now. That is off the highs, though. SLV is having a good 66-cent bounce, but that is also off the highs. So commodities bouncing, but we are seeing a little bit of a move off the highs. Interesting to look at some of the miners today. ABX is down 31 cents, so this continues to collapse down. And this just leads me to believe, and you can see I day traded it today a little bit, but this leads me to believe that at some point, if we zoom out here, it's got to go down to this key level down here. Okay, so again, that's what it's got to be, in my opinion, when we go all the way down to about the 17 and a quarter level, 17.30 level. We're still about $2 away from that point, but at some point it's got to get there. All right, RGLD is another gold play. This is basically flat on the day. So even with gold bouncing, a lot of these gold stocks are not getting bounces. GDX is up about 28 cents. It was up much, much more earlier, but a very minimal gain at this stage of the game. So not a very good result here on GDX at this point in time. Okay, and again, that's the miners ETF, so that tracks all the miners. That includes Newmont Mining here, which is up 19 cents on the day. AUY, Yamana Gold, which is only up 4 cents. Look at that gap up today and pullback. This is the daily chart of Yamana, and you can see it gapped up great today and then just fell right off a cliff and came all the way back in. So miners continue to be under pressure quite a bit here. Very, very good pressure out there, and we'll have to see exactly what is going on. Okay. I'm trying to just scan through a couple other charts here, and let's just see what's going on. IBM is having a nice day. You can see IBM hovering near the highs of the day. This stock was actually somewhat on the stronger side. It sold off towards the end of the day yesterday, but believe it or not, early in the day, it was actually positive yesterday, even during the selling. So this stock is bouncing back nicely today. Okay, and we'll go on from there. Let's take a look at Chevron. Chevron's getting a small bounce after a pretty sharp sell-off yesterday, but really it's only up 37 cents. And if we go to the USO, this is exactly why. The oil trade here, the USO, is only bouncing minimally today, 25 cents higher. So with such a minor bounce, it just tells us that there's still a lot of weakness in that oil front and therefore in the oil stocks. In fact, APA, Apache, take a look at Apache down $1.10 today. So there's a lot of oil stocks that are under pressure. Even Exxon. I mean, this is a pretty big bounce in the markets today, and Exxon's down 13 cents. So we are seeing weakness in the gold area, and we'll again track that, see how it all plays out. Apple continues to hover here. Here's your daily chart, guys. So funny because yesterday I got asked by a couple people. They said, "Oh, should we buy puts on Apple?" And I said to them, I mean, this is when we were trading at like 420, and the double bottom's at 419. And I said to them, well, why would you buy puts when you're right into support? I mean, isn't that kind of defeating the purpose? Don't you want it to be able to fall a little bit? I mean, basically, what you're gambling there on the off chance that it actually breaks through. The smart decision would be is to either wait for it to break through or wait for a bounce off double bottom support and then buy the puts. Puts obviously when you buy puts are hoping for a fall. You make money when a stock like Apple falls. So sure enough, today it's getting a bounce just as predicted. And again, I think eventually this level will break, but why not get a better entry on those puts like you're getting today instead of doing it right on top of that level? I even think you could get a couple more day upside on Apple before it finally comes down. It will fall and break on the next big move down in the market, folks. That's what the charts are telling me. The next time this Dow is down 100 plus or the Nasdaq's down more than 30, you will see a break of that 419 level. So it's coming. It is coming. And this is coming from someone who's bullish and went long Apple right here with members here to the money stocks, and we rode this thing up for a good $40 plus, basically a 10% move on Apple. But now at this stage, it's very, very clear cut that after it came back, hit it, and then hit it again yesterday, we are looking at some point a breakdown in the not too distant future on Apple. Okay? I'm trying to think if there's anything else in motion today. Keeping track of a couple small caps that could be in play, but I'm not going to release them in this video. Those will be just for members when I talk about them in the future. And again, for the most part, just some good scalping action in the day today. Great scalping action, in fact, on some of those metal stocks out there. And let's just keep doing what we're doing. I mean, great day yesterday. We sold some stocks for profit yesterday, and we'll do some more today and in the next couple days. Just keep playing the charts, guys. The charts will tell you everything. We knew the market was going to fall days before yesterday. We ultimately put ourselves in that position and are getting paid dividends on it today. Not surprising that there's a little bit of a bounce. The key is how much of a bounce will ultimately result, and we'll go from there. All right, come join us here. Take the 7-day free trial to the Research Center. Come join us if you're a swing trader or an investor. That's what the Research Center is for. We will teach you proprietary strategies, give you swing trade alerts. If you're a day trader, come join us here at InTheMoneyStocks.com, the Intra Day Stock Chat. Take care, folks. We will see you soon.